Hi, my name is Zaim. So for our task in FSC4, we need to help our college, which is Badrol, to convince the Abu Partnership Enterprise to change from the partnership into a company. So here's some explanation why Abu Partnership Enterprise need to be changed into a company to form a business. So, before we start, why should Abu Partnership need to become a company? Let me explain what is a company. A company is a legal entity that is formed when a certain number of people come together with the same intention of providing goods or service to the customer. Some of the advantages of a company include being a legal entity and quality decision making. So, this is the main point. Why should Abu Partnership Enterprise to be changed into a company for business? The first one is the company of different legal entities specific from the members who constitute the company. For example, we can take up a company Perdua. If someone wants to sue a Perdua company, they cannot sue the members, but need to sue the company itself. It is because Perdua and the member is a legal separate entity. The second is the benefit of the shareholders is do not risk being personal asset because of the company's debt. Because of corporations are considered separate legal entity from the people who own them. And the last one, why the Abu Partnership to become a company is the company will give opportunities in expand in their business. So now I will talk about the classification of the companies. Companies have three types of company, which is company limited by share, company limited by guarantee, and company unlimited company. So the first one is company limited by shares. According to Companies Act 2016, the liability of the company members is limited by the amount not paid on shares they hold. This is referred to as a company limited by shares. The shareholder has to meet the debts of the company only to the extent that is unpaid on his shares, and no separate property can be used to meet the debt. Usually, company limited by shares have the words BHD or Berhad as part of the end of its name. The second is company limited by guarantee. In a company limited by guarantee, there are no shares, hence there are no shareholders. Instead, the company will have members. The members of a company limited by guarantee are bound by a guarantee in the company's article of association, which requires them to pay the company debts up to a fixed sum. And the last one is unlimited companies. There are some advantages of becoming an unlimited company, such as having a separate legal identity, allowing the company to take out the contracts in its own name rather than the names of the directors and shareholders. And an unlimited company is very much like a regular private company limited by shares. It must be registered with registrar and have a memorandum and articles of the associations. There are directors that manage day to day to running the company on behalf of the shareholders. Person of certification control and annual confirmation statement must fulfill and submit by registrar.
Assalamualaikum, my name is Amar. So today I'm going to talk about types of companies in Malaysia. Firstly, private limited company. These types of business entities are known very commonly in Malaysia as Sendirian Berhad. Sendirian Berhad is a private company limited by shares, which is the most common company registration type in Malaysia. Secondly, public limited company. Similar to a Sendirian Berhad company, a Berhad company is a company limited by shares with a few differences. It can offer shares to the public without a limit on the number of shareholders, requires at least 2 directors, and is governed by Bursa Malaysia Securities Berhad and the Security Commission of Malaysia. Thirdly, foreign company. Foreign company is a company, corporation, society, association or other body incorporated outside Malaysia. Companies owned by non-Malaysian who have established business in other countries and would like to set up a company branch in Malaysia for operation or customer service purpose fall under this category. I think Abu Partnership Enterprise suitable to public limited company because it is easier to raise funds as the company is listed and is able to issue shares to the public and has flexible ownership of shares. The registration requirement based on Companies Commission of Malaysia, CCM. First, citizens and permanent residents of Malaysia aged 18 and above may register a business. Registration of the business must not be later than 30 days from the date of the business commencement. The nature of the business must not contravene any laws or be likely to be used for unlawful purposes. Minimum one shareholder. Registered office address in Malaysia. Written confirmation from direction shareholders and beneficial owners that they are not politically exposed a person. Email confirmation is also acceptable. Finally, minimum capital is only RM1.
Next is financial reporting requirements. Company Act 2016. In Company Act 2016, Section 255 mentioned that in Clause 1, the directors of a company may apply to the registrar in writing for an order relieving the directors from any requirements of the Act relating to the form and content of the financial statements or consolidated financial statements or to the form and content of the director's report required under Section 252 and 253, and the registrar may make such an order either unconditionally or on condition that the director comply with such other requirement relating to the form and content of the financial statement or consolidated financial statement or director's reports as the registrar thinks fit to impose. The application for a relief order under subsection 1 shall not be granted if the registrar is of the opinion that the order is not consistent with the approved accounting standards. Okay, that's it. Next slide. The registrar may, where he considers it appropriate, make an order in respect of any class of companies relying the directors of a company in that class from compliance with any specified requirement of this Act relating to the form and content of financial statement or consolidated financial statement or to the form and content of the director's report required by Section 252 and 253. The orders under subsection 3 may be made either unconditionally or on condition that the director of the company comply with such other requirement relating to the form and content of financial statements or consolidated financial statement or director's report as the registrar thinks fit to impose. Okay. Second, in Financial Reporting Act 1997, Section 243 to Section 251 of the Companies Act 2016 covers matters pertaining to the preparation and presentation of financial statements. The Act requires financial statements to be prepared and presented in accordance with all improved financial reporting standards in compliance with the requirement of the Financial Reporting Act 1997. The accounting records maintained and characteristics of the financial statements prepared by the company are governed by statutory and other regulatory pronouncements. The Company Act 2016 states that every company and its directors and managers shall cause to be kept such accounting and other records as will sufficiently explain the transaction and financial position of the company and enable the preparation of financial statements and any document to be prepared from time to time which will be true and fair. These records should be kept in such manner as to enable the transaction and financial statement to be conveniently and properly audited. All accounting and other transactions should be recorded within 60 days of occurrence of the transactions, and the company should retain the record for 7 years. Elements of annual report. An annual report is a financial document that a public company prepares for its shareholders. These reports can be used by potential investors and securities analysts to evaluate a company's stock. The report is usually the best source of information for most people to determine the financial health of a company. Here, a basic overview of what is contained in an annual report. Okay. Firstly, chairman letters. The letter will highlight the company's accomplishment for the year as well as the company's failings. The letter will state what led to the company's success and will also address how it dealt with its failure or issues. The chairman's letter will provide an analysis of overall business performance, insight into the markets is in, and any opportunities for growth. The letter will also point out any challenges or risks facing the company, such as changing market conditions, recent scandals, consumer trends, and else. Okay. Secondly is business profile. The business profile is a basic element of an annual report. The section describes the company including what it does to generate revenue, its products or service, its operation, subsidiaries, and owns, if any, the market is competing in, including competition and risk factor for the business. The major changes made in the past year are also highlighted, such as new product, sales or marketing shift, new services, seasonal factors, excluding the holiday season, or any special operating costs. Okay. The thirdly is management's analysis. In this section, management discusses the company's operation in detail. Management will compare this year's result to results from the past. Management will often use charts and graphs to highlight the most important data. Towards the end of the analysis, management will outline its own expectations and plans for the company's future growth.
Now we are going to talk about legal requirement in Bursa Malaysia Securities Berhad. As you all know, Bursa Malaysia is the frontline regulator of the Malaysian capital market and has the duty to maintain a fair and orderly market in the securities and derivatives that are traded through its facilities. Bursa Malaysia actively supervises the list issuers and the brokers. The legal requirement in Bursa Malaysia Securities Berhad are: the first one is the securities. Under the securities, you have to listing, trading, clearing, and depository. The second one is derivatives. Under the derivatives, you have to trading with the rules of Bursa Malaysia Derivatives Berhad and clearing in rules of Bursa Malaysia Derivatives Clearing Berhad. The last one is the bonds. Under the bonds, your company have to trading and reporting with the rules of Bursa Malaysia Bonds Sendirian Berhad. As a conclusion, ABUR Partnership Enterprise have to change their business entity from partnership to company. It is because if they do that, this change will give an impact on their business in terms of control, obligation of liability, investment opportunity, and the expand in business growth. Furthermore, there are lots of benefits if they change their business entity from partnership to a company. First of all, there's a pooling of capital from many investors, so it is easier to get the business up and running. The second one, shareholders are not personally liable for the debts of the corporation. If the corporation fails, shareholders may lose their investment in the corporation but are not personally responsible for the loss. That's all.
And fourthly is financial statement. Most business wants to provide all of the financial statements because that generally causes information overload and most readers of the report won't go through everything. The statement most companies will include are the consolidated balance sheet, the income statement, the statement of cash flows, and the statement of shareholders. Some companies will include more financial information depending on the industry and size. This section includes an independent auditor's report to confirm that the company's financial statements are fairly presented and in conformity with generally accepted accounting principles.